Hello, good afternoon, everyone. This is Baja Pips. It is Monday, July 31st, 2023, 2:07 p.m. Eastern China Time. And today I'm going to be doing a weekly technical breakdown. Stay tuned, take some notepads out, and definitely would recommend marking down your charts and getting these setups ready for the week. If you're not confident in my analysis yet, you can check my previous analysis and my older videos. You could also, you know, try this on a demo account and see your results for yourself. But this is all going to be raw data, transparent analysis. I'm going to break down as many pairs from the market as I can in this recording, and I'm going to try to keep it under 20 to 30 minutes. So it's going to be a lot. Get ready. Let's start off with the economic calendar. I always look at it, the economic outlook for the next week every Monday, so we can see this is the next 7 days. I'm going to get to today in just a moment. I just want to look out for central bank meetings or interest rate announcements. Those are the two main announcements that I'm a little bit concerned about when I ever do trade, day trade or swing trade. I try to be liquid on my pairs right before those announcements. If anything, I try not to trade a day or two before interest rates. I do not trade on central bank meetings when there's a number. If you look over to the far right, it says actual and forecast. So I don't trade when there's a number for a central bank meeting. And the last thing I don't trade on is NFP. I don't trade before NFP. If it's the day before NFP, I'll trade, but the day of NFP, I do not trade until after the announcement. The reason why is because the markets tend to slow down, and when they do, it goes into indecision, and a lot of setups actually do not follow through and work. So just take that as it is. You can track it over time and validate my opinion, my analysis, but that's why I don't trade on those days. And I also avoid red folders. So you can see the high right here. These are high impact news announcements. So usually when I'm swing trading, it's not a big deal because I swing trade off of the larger time frames. But when I do day trade, I day trade off of the 1 minute only. And when I do day trade, I try to avoid trading around these times because they can manipulate your stops. If you get a day trade um, off the 1 minute time frame, normally I stop trading about 5 to 10 minutes before the high impact news if I'm caught up in that time zone. And then I don't trade until about 15 minutes after the announcement. So I know a lot of you might be familiar with people trading the news. I actually do not trade the news. I trade after the news or trade before the news. So I avoid the news altogether. The reason why is the news is the most manipulated event in the entire market. So if you want to take notes down, take some notes. The news is manipulated. So no one knows the data unless they are inside trading, and that is illegal. Inside trading means that they created the event and they know before the company releases the news event. Um, they report those numbers to inside traders that then place large orders in favor of that news announcement. That's inside trading. It's illegal. It's cheating, and it's really difficult to do anyways unless you have high ranking connections with that company. That's why a lot of companies, if you work for a company, you're not allowed to trade that company's stock. That's another reason why, just to avoid that. So um, right here, I don't really see much going on. When I do scroll down, I'm looking at the 2nd of August. I don't really care about New Zealand. I don't really trade New Zealand pairs. And if I do, it does not have a major impact on the entire market. Maybe if I am trading a New Zealand pair, then I'll probably avoid trading before the announcement, anyways. But I'm just looking to see anything along the week. We're getting into August 3rd. Nothing. Interest rate. You see that? That's for Bank of England interest rate. This is going to happen at 19 o'clock on my time. So that's about to be about 7 o'clock p.m. on August 3rd. So this day, which is in about 4 days, about 3 days, right? It's the 31st. About 3 days, about Thursday night, right before the US session, I will not be trading this. So I'm not trading because GBP ties in with the euro. They have a big influence on one another. And I will not be trading Euro USD at all until after the US session opens. That is just a heads up. You see, I'm able to identify these announcements ahead of time and I'm able to avoid them. So my trades are a lot more higher quality. Now I'm going to scroll down even further so I can see if there's any more of those. There's non-farm payroll on the 4th. So Friday also we have high impact news on the US dollar. Now this affects the entire markets for some reason. So because the USD is a major and you can see the US dollar across the markets, I tend to stay away from non-farm payroll for everything. So until after this announcement, so that's going to happen about 8:30 p.m. my time, which is about 8:30 a.m. in New York. The good thing about being in China is that we're exactly 12 hours ahead of New York. So even if New York's opening, I am in the middle of my night or the start of my night, so I can prepare myself and modify my schedule around that time. After that, it's going to be Saturday, Sunday, nothing. Okay. So that is definitely just a 7 day outlook. Now I can go into today so I can see exactly what's going on today. So here I am with today's announcements. And inflation, it's not the biggest issue, but inflation definitely does play an effect during the day trading, the intraday trading. So because I do intraday trading, I trade the 1 minute on the Euro USD every day. I do avoid Mondays, but I am willing to trade on a Monday after the announcement. This is happening in 2 hours and 45 minutes. So about an hour and a half to 2 hours after the London Open, this announcement is going to happen. So I'm more than likely going to trade this either after the announcement or before during the US session. Outside of that, there's nothing else for the day. So I should have a pretty clear day. Now, I'm not going to day trade, but I'm going to break down my swing trades now. So just a moment while I pull up my charts. So here I have my charts pulled up and I'm going to break down a lot of these pairs. I have stock market pairs mixed up with futures, Forex, and I have some, just a bunch of different stuff, cryptos. And I'm not going to break down all of them because as you can see down below, I have well over 20 plus pairs and I don't have the time to take 1 minute each. So I'm going to just break down some major pairs on each market and then I'm going to update y'all one by one. So let's get started. I'm going to get all the way over to what I'm going to look at right now. Just a minute. Right now, looking at Apple stock, and I'm going to get all the way back to the beginning of my analysis where you can see the start. So now, break down my first pair that I see. It's going to be really quick on some of these, and then some of these pairs are going to be a little bit longer. So Bank of America, that's what BAC stands for, Bank of America Corporation. So those of you that are in the United States, you know what this company is. It's a bank, it's a major bank, and at the moment we are experiencing a nice uptrend. The market has been moving up for the past month. You see, beginning of the month, it was breaking out of a midterm range, and we did have that breakout followed by a pullback about 15 days later, and then we managed to go on up for a solid week and some change. Right now, we are experiencing a slight pullback, which is why we are not going up right now. It could either be profit taking or the market could be reversing or going into a longer term consolidation. So for right now, we're going to just stay on standby, or I'm going to stay on standby on this pair till the highs of 32.92 is broken. Then I may be looking for a possible move up north a little bit further up. And I'm probably going to take like a 2-to-1, 3-to-1 trade all the way up to 35.65 want to go to the psychological zone just to be safe, take it on up to about 35. And that's going to be the breakdown for that. You can see how nice this would be. At first, I would need to see 32.92 broken, and then I may be taking Bank of America North. As far as selling goes, I'm not too interested in sellers. We can see that back in April of 2023, the market did encounter a bear trend, but that bear trend was recently taken on out. And yeah, I'm looking for this is just a pullback from that resistance right here, as you can see. So I'm just waiting for a breakout north, and I'm going to look for a nice trade to continue this uptrend that looks like it's been going very strong as of recently. Looking into Meta, same thing, very beautiful uptrend, as we can see. I do look at the daily chart when I'm breaking down my breakdowns for stocks. Forex, I look at the 4-hour. We can see that Meta platforms. This is Meta for Facebook, and right now, as we can see, Meta is encountering a slight pullback, and it's recovering from that pullback as we speak. So this is a very strong trend. It's been moving on up in increments of the entire month. If you get in at the beginning of the month, it does make solid moves on up. I would actually invest into this. It's actually very good and healthy to invest into. And so I am looking for the break of 325 highs, and that's pretty much what I got on Friday to resume this uptrend. I don't really think it's going to come and reverse back. Another indicator of a possible thrust on up is the fact that we did gap down, and we gapped on up. We pulled back. See, that was on the 27th. And then we have a continuation north. That's really good to see if you're looking to buy. And look at the 1 hour time frame, so you see a little bit more detailed visuals. And as you can see, we just gotten out of there. It gapped up, like I said. This was on the 26th last week, and the 27th actually. And then we pulled back, broke out, nice pullback. This to me is a very, very great example of an uptrend. It's a very strong uptrend, and I might be interested in buying this as well. The only problem is I'm already tied into Tesla. I'm going to break down Tesla next. This is just to sum up the stock market. So Tesla, as you can see, I'm currently in some longs. Same thing happening with Tesla. We have a nice solid possible push on up. Right now, we are still sitting a little under that weekly range. It's been ranging for about the past week. We click on Friday and we drag it on over 6-7 days. It did pull back and it kind of just congested near some lows. So I need to see a gap up later on today. And if we can gap on up, I'm going to take my profit at 311. That's just going to be TP1. So I could trim my stop losses after that area. I'm going to go for about a 2.3% target on this trade. And like I said, I could trail it. I could scale into orders along the way on up. That's the benefit of day trading or swing trading using the daily is I could scale into more positions. So my whole entire trading plan is waiting for the break of 273 highs. If that can break, then I can look for a pullback anywhere in between here. As long as I have a break day, I call it a break day. So you can kind of see it happen in the past on the 28th of June. It broke out. Sometimes you might have a break day like right around there, the 12th of July, before it reached that target. And that's when you can actually trail your stop loss to break even. And then I would have added another trade, maybe half the position size to reduce the risk, and then take it on up to its initial target. And that would have actually gave me more profits. So I could have, risked 1% to get 2% and actually ended up with 3 or 4. That's the benefit of just having a solid trading plan and everything. I plan on doing that with over here. But we are experiencing a little congestion. So once again, if this does not go through, I'm prepared to get out. As you all can see, I have a stop loss right below 254, 255-ish. I have a stop loss, and it's a 1% loss that I'm going to be risking on this pair. So after that 1% risk, pretty much I'm going to be out of the market because one or two things are going to happen. It's either going to consolidate for a while, and if you look back in the past, it's done that. So sometimes the market can congest. This congestion right here actually occurred for about 20 days, 21, 25. You see, all of this was a consolidation, and it actually happened for about 52 days. So that was a little under 2 months. So that's just an example of what can happen if my stop loss is hit. I don't know if we're going to go through that sideways congestion again, but it is very much possible. So I will just stay out of the market at that point and put my capital elsewhere where it can be used a lot better. And that could be a scenario, which is reason why I have my stop loss right below here, because this could be the start of a consolidation, or it could be a reversal in the markets. So if you look back here, say you were going long and you went long again, maybe I would have had a stop loss right around here, and stop loss would have been hit within 4 days. And then we had a downtrend that began that actually lasted for about a month and a half. And there was a lot of pips that you could have collected if you shorted it, or you could just wait for the new rally to begin, which happens shortly after that. There was a new rally that began, but this was a rough time for the markets because, as you can see, this kind of went 120 days, 150 days. So it's about 5 months of nothingness. And in that time, you could have just left Tesla alone and could have traded something else. I'm gonna go back to Meta so y'all can see how that looks on a daily. Because during that time, you could actually utilize your margin somewhere else. Look at this. We pull this back 150 days. You could have been buying Meta the entire time on the way up and been making money in here while Tesla was going still. Tesla is a tech stock, but it's also part automotive. It's kind of like the entire sector. So Tesla Energy, you have Tesla Automotives. Meta is just a tech stock. So if tech stocks were on the rise, the S&P, the Nasdaq must have been up. But Tesla, like I said, it is a Nasdaq pair, but they also have different sectors, such as their automotives, and who knows, maybe automotives where it's doing bad. I go to Volkswagen. This is a European stock, but this is another prime example. Volkswagen was actually going down during that time as well. It was actually in a congested range. So LVMH, this is a luxury brand industry. Louis Vuitton, Moet Hennessy. So we have, alcohol, designer clothing. This right here, this was going on up for some time. So, you have different things to dab into. That's what I love about trading stocks is that if something is not working out right away, you can always come back to it and let the conditions play out. The market's going to ultimately tell you what's going to happen. But that's pretty much my stock portion of this. Let's get into the Forex pairs. I know a lot of you all trade Forex as well, but for those of you that do trade stocks or are interested in trading stocks, I really am pretty fluent and efficient in that. I love doing it. I love stocks. It makes me a lot of money as well. And I look forward to always trading stocks. And especially when the Forex market is kind of like going nowhere, stocks are going to be there. We're going to look at CADJPY now. This was a breakdown I did last week. And I want to start this Forex sector off by breaking down Canadian dollar against the Japanese yen. So as you can see right now, the Canadian dollar is kind of in a congestion. It's in a range. It's in a larger range. I'm going to go to this 4-hour chart because I already marked it on up. I didn't. I'll just use this one. Same thing. So it's in a larger range. And this is the high of the ranges right here, right around 107.9. And we have the lower end of the range sitting right here at the most recent lows that actually happened last week at 104, 150. Now, my stop loss was around here. I'm going to mark it on off so y'all can see and check my previous weekly technical breakdown so you can see that video as well. But I had a hard stop right around here, which means that I got out before this. But hard stop is basically just like it's going to be going into a congestion or a reversal, or it's just whipsawing around back and forth in a range. Those are the reasons why I have a stop loss. Other than that, I know my analysis. So my trades normally they should work out, but when they don't, I have a plan for that. And I just lost 1% on this trade. It's all good because I had other trades that were working out, and this is just one trade in a series of 100. That's how you have to view your trading is don't be too tied down to one trade. One trade is just one trade in the next series of an unlimited amount of trades you're going to be taking throughout your career. So it's okay if you have a loss or two. That's why I always keep my losses at maximum 1% risk per trade. Normally I do a third percent risk, but on this one it was a swing trade. I wanted to just had a little bit more confidence in just moving on up, and it kind of filled me. Initially, I had a nice trade. I had about a 60 pip stop loss, and it did go up almost 2R in my favor. And then that's when we had some major market news. We had Japanese interest rates. We also had Canada interest rate announcements. We had a lot of high impact news that actually changed the catalyst of this market, which is why I was saying that during those times, I like to get out or tighten my stops. So I did collect profit on this pair, right around here, and that was like 0.5%. And then I actually tried to go long again, the next couple days. And what ended up happening was the market did not it wasn't favorable, and you can see my stop loss was right around there about a week or so later, 71 pips lost. And then we had a downtrend, and the downtrend was actually a mega downtrend, as you can see right here. It was a super downtrend, and it kind of shifted the catalyst market, as y'all can see. That's when I marked up these lows right here, because this was the last uptrend. We can see lower point A, higher high, higher low, higher high. So that's an uptrend, and the most recent uptrend was breached, and that's why I got out of that trade. If that was breached, like I said, we could go into congestion, but right now it looks like it might be a major reversal. The only problem is that these sellers that got in up here, they already took profit. And if I was selling it, I would have probably done the same 110 pips stop loss, probably smaller, and probably would have just aimed for the lows of this. And that's exactly what they did. They aimed, took out the lows. But what ended up happening is that it reversed completely after that. And if you were still holding on to that, you would be stopped out as well. What that's telling me is that both buyers and sellers are equal. And when that does happen, we're in a range. And the range could last for as long as it wants. I mean, you look over here to the left, back in May, there was a range, and the range was going on for about 40, 50, 60 days. So about 2 months before it started moving back on up. That can happen as well with this pair. We could be going into a range. And in that time, that means that Canadian dollar and Japanese yen are equal. Neither is stronger than the other, or they're both weak, or they can both be strong. So right now, that's why I got my stop out hit and I didn't chase the market after. I don't want to buy it nor sell it in here unless we break above the highs of this range and we have it could be a continuation, or we can break above the highs and reverse back into the range, which then there could be a possible reversal trade. But that the highs of the range is around 107.9, like I said, and then there's also the lows. I wouldn't trade anywhere in here off of the 4 hour at least. If you are intraday trading, or you have you're using the hourly time frame or 30-minute time frame to trade, you could trade within this range, but I wouldn't try to go for anything lower than 104.18 unless we have a breakout lower and a continuation, or a breakout lower and a failure of that breakout lower and a pushback northbound inside the range. Those are all my scenarios. There can't really be another scenario. I that's why I have ranges. Sometimes, I mean, you cannot control where the market goes. You cannot determine that. But what you can do is you can actually just be aware of the conditions and prepare yourself for what can happen next. And you do that by marking off ranges and showing your reaction around that. So it could also come up here, consolidate, and go down here and consolidate for a while. That's my last scenario. So I have all the scenarios that the market could actually do, and I just broke it down. And that's why I like ranges. It happens all the time, and you could trade it or you can ignore it. So that's my breakdown for CAD JPY. I'm gonna be sitting out on that pair this week, um, just flat. Same with UJ. UJ is interesting though. UJ, we can actually be breaking on up northbound. Um, just like CAD JPY, it is a little bit different. They don't mirror each other just because they're JPY pairs. U.S. economy is different from Canadian, but right here we do have a potential reversal north. Only problem here is, once again, if you were north, if you were buying, look at similar pattern is showing up for the UJ. There was a recent stop out on the 27th, which was last week. and price did not. It failed to go down, and then we had a reversal north and took out those sellers as well. So this is also a range. I boxed it off to show you all the example. Once again, it's in a range and it is at the higher end. I just would not be chasing this market right now because what can happen is it can break up for the next 8, 12, 16, 24 hours and then it could fill. Or it can break up, pull back, and show a nice continuation north, taking out these sellers up here back in June highs. So there's a couple scenarios I'm looking at right here. UJ, I'm on standby as well, but it's definitely a pair looking like a possible setup for a good quality move. But that's UJ. Real quick, briefly breakdown. NZDCHF, I marked this one off a week ago, and pretty much it's doing exactly what I expected. It got into a range. I said 1, 2, 3 waves of equal size, similar equal size is going to be in a range, and that's exactly what it did. It got caught up in the 75 pip range. I was bearish overall, but I did not take a trade on this because I feared that we were going to possibly bounce off these lows of that range I marked off a week ago. We could see that price did exactly that. It bounced off, pulled back, and it just congested in that low. You can't really catch anything if you're swing trading for 50 to 70 pips. That's nothing, you understand? So that's why I avoid that type of setup. And it's doing exactly what I expected. And I like that. I don't have to trade to be a winner. I can also sit on my hands and say, hey, listen, you can sit on your hands at any point and say, listen, I don't want to trade because I know that I could possibly lose if I take this setup because the conditions are conflicting. If they're conflicting, you don't want to trade. You want to sit on your hands. You want to be on standby until something really does happen. And I'm still waiting on the breakout of that area. So for better visuals, I pulled up the NZDCHF chart on my trading view so we can all see together. This has much clearer visuals, and I'm going to start marking off that range that I was showing you all on MetaTrader. Here's the horizontal line. I'm going to mark this one off right here, and then I'm going to give another one at the south end. So it's very easy for me to target, identify these all the time. And yeah, we're in that range, kind of like I was showing, and I want to just show what I expect to happen coming on out of here. So we have a breakout, first of all. So I need this current trend to continue. I need it to break out, and I need it to pull back. Wrong one. Hold on just a minute. Disregard this. Throw this away. Wrong indicator. That says XABCD. Just a minute. I'm just trying to find the right Elliott wave. I think it's right here. ABCD. Let's see, this is the right one. There we go. A. So we need a breakout. Okay. Make a higher high. Then we need a pullback. Higher high is not confirmed until it is confirmed. So after that breakout, we need to have a higher low. Okay. Followed by a higher high. So similar to what I just drew here. As long as price breaks above that higher high, it can be anywhere, it could be any size. This is just a visual example. This is what I need to see in order for me to buy NZD DHF. Another thing that can happen is it could actually come on down and reverse and start to come back into the range. So I'm also going to show a scenario that could also happen. It could break out, create a higher high, but then it creates a lower low, followed by a lower high, followed by a lower low. And that would mean that the market is reversing, and that's not good. And that would be opportunity for sellers to step back in and take price on down to the lower end of the range, which we could then look for a possible short position southbound. That makes sense. Hopefully this visual is very clear, and obviously I will take my profit before 0.5309 is reached. So that is NZDCHF in a nutshell. So I'm going to be sitting on standby for that pair as well. Let's break down another Forex pair, try to find something for today. All right, so I'm going to look at Euro AUD on the next pair. It's doing the same exact thing. So So you all can see the nature of the markets and kind of how it's moving. This is why I said the Forex market correlates a lot of pairs until a major event happens, and then they all go their separate ways. Euro AUD has been in a longer term, larger range since end of June. Nothing, just down, up, down, up, down, up. It did exactly what I said about NZD It broke the highs, reversed, create a higher high, followed by a lower low. You see right there, lower low, lower high, lower low. Could have been in here for a quick 1.5 hour trade, and then it came back reversed and did all that. Whipsawing back and forth. Nothing until we have a clean breakout or another one of these higher highs and lower lows again. It can just keep doing that for quite a while. So now that we have that broken down, that's Euro AUD. This is just another stock, Nvidia, Apple again, GJ. I'll show y'all. Oh, wow. GJ had a major move. This is something on my watch list. But you see what it did? Did a false breakout. They pulled back. Sellers came in, stepped in, took it all the way down for 3 or 4 to 1. JPY just had interest rates. GBP also had high impact news recently. And this happened on Friday. And as you can see, it failed. I mean, it succeeded. It fulfilled its target 2 to 1, 2 to 1. If move happens to be 2 to 1 or 3 to 1, it's fulfilled its target. So if you had like a 200 pip stop right here, you're going for like 400. Still that at least 2 to 1, its target is achieved. And it made a quick reversal all the way back to the origins of that trade. So now we might have, this is what I call a false breakout. Only thing is it is conflicting within a higher high, which is what I marked off prior to this video, 184, 190. So if we do have a nice 2 to 1 on the way up north, which is not that much pips left, but about 135 pips. So we could break up these highs right now that we're currently testing, 182, and we have a pullback above those highs. I might consider a nice long trade for about 100, 150 pips. Take out these sellers right here that were also holding the market because this is fair. Whenever price is coming in strong, because this to me is buyers are way stronger than sellers. They may not look like it, but sellers took it on down, and the buyers came back and took out all those sellers. And the velocity of the buying power is way stronger right now because it takes a lot to reverse the market for one, and for two to continue moving on up. Now we have these sellers which are weaker than how they were before. So this could be a really nice reversal. Preferably, I like to see 184, 367 highs taken out. We do have GBP interest rates coming out on Thursday, so who knows? This might be something to be looking out for, and that could send the JPY pairs back north. So that's a prime example. USD CHF, nice. You see that? I marked this one on off last week, so now I have to move my horizontal line a little bit further north. But as you can see, price had broken on out and it pulled back in the range. So I'm a little concerned about this. So what I'm looking for is a possible breakout of these most recent highs. So we can break these most recent highs that just happened because we definitely had a pump fake. I call it a pump fake because it faked out. That's one of my moves. It's called a pump fake. We had a breakout. Somebody bought it, and then we had a fake out. And now we have a possible move back north. So for me, because we are just so tight right now, like right on the cusp of that breakout line, I need to see price break out higher. So for me, I'm going to look for the highs of 0.874 to be broken before I take a long northbound. This is USD CHF. So, USD interest rates did happen, and that's out of the way. We have non-farm coming up, and that could be a great opportunity for trading US pairs. GU, we had a breakout south, fake out north, breakout south. Show y'all across here right now. So we had a fake out north, breakout south, and they both kind of point that little standby phase. So I'm waiting for a possible. This is not bad. It's not bad. I would definitely be bearish on this pair right now with the 65 to 70 pips stop loss. But because the pullback I consider this a deep pullback because we broke some recent lows, but we didn't pull back and continue. We pulled back really deep. So this could actually continue north and take out these sellers. And This is what I call a flat market. You don't have any type of move either way. So I would just leave that one alone. Google, not really going to care about that. It's north. It's very obvious for me. I would be buying Google right now. But since it's a tech stock, it's a NASDAQ pair. I don't want to tie up too much of my capital in one. Yeah, I don't want to tie up too much of my capital in one. So that's that. Now we're going to get into the futures. We have some silver right here. And I'm going to get into gold in just a moment. But silver, I like to trade on the 4-hour chart as well. And we do have a nice downtrend that is starting. Personally, I'm going to look for a short on silver. I'm going to do that after the video, but I'm going to show y'all my parameters so y'all can see firsthand exactly an entry, and we can follow up with this one. So I found a trade. Silver. Silver looks like a very nice, solid move. And I personally would like to see the lows of right here that I just marked on off. I'm going to show you in a second. 24 flat, preferably. I like to see this psychological zone broken. But I can also possibly trade this right now. I just don't know specifically if this is going to follow through or continue on down. I am interested in the silver short. There's a couple of reasons why I'm going to break this on down right now. Because buyers did have the chance to take it on up, and they failed once, and then there was another attempt on up, and they failed twice. And now sellers are coming in a little bit strong. So now that we have this break on the 4-hour right before London Open, I'm actually going to be looking for a stop loss on a 5-minute time frame. I'm going to have a really tight stop, and I'm going to actually try to take this one on down south. And also, you guys can see that it's conflicting with the 24.5 resistance area. It's just been dabbling around that for quite a while. So it's been going north, it's been going south, and it hasn't really gone anywhere recently. So it's telling me that the buyers attempted to take it on up a few times and they failed. And right now we have an opportunity short. I might short silver. If I find a better setup in gold, I'll pick that over silver. But that is definitely going to be something that I'm going to be watching. All right. Australian dollar, this is crazy good. AUD USD just had a fake out, but they also have a possible short. Not really going to pay too much attention to that. GA, we had a very nice recovery, and this is also a possible northbound move. So, like I said, there's a couple movers in the market. I would need to see the highs of 92.9 broken, and even still, we have some major highs. So I would stay out of here. I would actually stay out of GBP AUD until we have more of a thrust, because we have a current uptrend that's ongoing, and I need to see it strengthen more past the most recent monthly highs of 1.938464. You can break above those highs. I'm going to go long on GA, possibly. And now here is gold. So gold is not doing that great, as y'all can see. Silver is doing way better. Gold, we do have that nice thrust on down as well. And I do expect silver, gold to continue short, but we are tied up within that range again. But this could be something to take down if this is your setup. I just like additional confirmation. So for me personally, I'm going to just put gold aside, trade silver because it's a better setup for me. And gold, I would like to see price actually come back down below 1941 to actually look for a possible sell setup. By then, I would already pick silver. That's why I say pick silver or gold. Don't do them both at the same time. And yeah, going into 38 minutes, about to be 40 minutes, I want to finish this video on up. AUD CAD doing the similar thing as AUD USD. It's bearish, but we're going to sit on standby. Euro JPY, I'm very, very surprised with what happened here. It was going bearish, and we can see that Euro JPY is currently indecisive. It was bullish for a little bit. Buyers failed a couple of times. They tried taking on up on the 24th. They failed. Tried to take it on back up around the 27th. Failed. And then sellers came in, and they're failing as well. So this is just no man's land. I'm just going to sit on standby for this pair as well. And yeah, that's pretty much it, y'all. Let me get a crypto pair, Bitcoin. Lastly, last but not least, if you made it to the end of the video, I have a treat for you crypto guys or guys and girls. We have some Bitcoin. Bitcoin entering a bear market. You heard me right. Entering a bear market. So for me, I will be on standby with any investments on Bitcoin at the moment. But it's not a horrible thing. To me, it's not a major bear market. It's just a bear market. I would have collected profits if I was already in this from like June. And I would have collected profits and I would just wait for a possible lower buying opportunity. That's what I mean by bear market. If you look at this trend line, it's been going up since January. We had higher high, higher low, higher high, higher low, higher high. So Bitcoin is actually bullish overall long term. But if you look to the far left, it's reaching June of last year's highs. And that's why we had that crash back in April. We had a crash. It crashed into the highs. And there was so much buying pressure that it actually did whip it up from some lows. To me, this is very bullish, but at the same time, we are going sideways. Remember, I said 3 waves of equal of the same size. So there was 1 wave right here, 2 waves, 3 waves. We're in that range, which is why I drew this box zone right here around 31.9 and the lows around 24.6. Y'all see how my confluences do line up very nicely. I actually even drew this right here. This is a horizontal line at around 29.3, which is what it's currently testing. So I did have a Bitcoin breakdown like a week ago. Go back, y'all can see that I do this. Markets react to my points. And if y'all are investing, I'm not saying I'm a financial licensed analyst that can give you, verified results, but I personally think that my analysis and breakdowns are better than theirs because I actually trade. I don't take the test with certification because I don't need to. I trade. But yeah, if those of y'all that are following me, if you want some Bitcoin advice, I would be on standby until the highs of 31,919 is broken, and we have a nice continuation. If those are broken, we could be seeing some stronger longs. We can have a very nice bull market. As you can see, I've marked off 50,481, and that is going to be my next target for longs. So I think it's going to have a very nice breakout. Only thing is that we might have a pit stop right around 40,000. So right around 41.4, we could have a little pit stop. So price could crash into those highs and consolidate for some more. So that's probably going to be where I look for some profit taken and another potential long entry. Or I could just keep my longs open and add to the trades around that point before we reach 50,000. So I'm overall still pretty bullish on this. Now, if the lows of 24.6 is broken, I'm going to be a little concerned with longs, and I would probably look into staying on standby on Bitcoin because we could be going into a bear market until 19,000, and it could possibly touch 16,000, but I highly doubt it. It doesn't look like that. It looks like a nice bottoming formation right now, which means that sellers did attempt to take it on down last year. So those of you that was fearful of Bitcoin crashing, it actually did not, and it did create a bottom. It bottomed out, and a lot of institutional investors actually could have bought down here, and they could be supporting this Bitcoin at the moment to take it on up north. So I am still overall bullish. I don't like to short Bitcoin looking like this. It doesn't look like a great short. We'll go back in just a moment and show y'all silver and show y'all this. You see that? Now you see silver. This is a good short because we have a nice thrust onto the downside. But if you look over at Bitcoin, it's not so good because we had so much indecision and the market peaked on. I call this a peak. It was peaking down, but it did not really make that much of an impact. And so we're going into another range within this downtrend, and that's not good. So sellers could actually be getting faked out. It could be going northbound into here and go bullish. So that's it for my weekly technical breakdown. It's been about 44 minutes and counting, and I'm proud I'm able to do this every week with you all. Congratulations if you made it to the end of this video. There's a lot of value into this. I don't know why I don't have that many more views. Maybe I just don't market it and I don't care. I literally just upload my videos, post it, and if you want to watch it, hey, you might get some great insight. I'm very fluid and transparent. I don't even look at these that much before I record. I just press the record button and I get to it. So that's exactly what I did here. I hope y'all enjoyed it. Like I said, all my analysis are pretty accurate. That's why I trust my analysis. I trade my own money on it. Um, I can actually show y'all right now the current account, so y'all can see that I am actually profitable on the account. So I'm currently up 102.43, and this account has been open for about a week. If I go to the last month, y'all can see the entire breakdown. There was a deposit right here on the 19th. And I had some losses. I was risking a 0.25% per trade before I took my first 1% loss on a trade. And then I just said, hey, you know what? Let me just start risking 1% per trade each. So right now I would have actually been up about 3%, but I'm up 2.4%. Actually, I would have probably been up 5% because I had some winners before that. I was only risking a 0.25% per trade, as y'all 300 is not even half of what I was risking before. It's not even half of my overall account. I ended the week strong. I do day trading along with swing trading on the same account. But yeah, I'm gonna just start risking 1% per trade. I'll follow up with y'all later on, but you can see I am net profitable. I am a profitable trader. This has only been a week, like I said, and I only started risking 1% like 3 days ago. So hey, we'll see. But I do trade everything that I say I trade. See, I have day trades, but I did have cat JPYs. That was a loss. Honest. Okay, I don't need to lie. I trade Tesla. Y'all can see my Tesla orders are still in. And yeah, I like to be transparent. There's no point in lying when you actually know what you're doing. It's just a waste of energy. You know, I rather just be fluent, be transparent. Let y'all know what I do. And as I get better in my journey, y'all can actually see the growth. And that is one of the greatest feelings ever, is being able to show not just myself, but also the world that I started somewhere and where I end is going to be like a paper trail. Y'all can go back to these older videos and be like, hey, you know what? He actually improved, and it motivates my crowd. It motivates my students and my fans. I do have a few fans, believe it or not. And yeah, shout outs to all my fans. Keep it up. You know, y'all are day ones, early birds to my legacy. And I'm gonna continue doing this for as long as I can. So follow along with me. Forget about all that other crap y'all see online. Follow this guy right here. I have private coaching I offer. If y'all are ever interested, I also have a Forex Academy that comes with a private coaching. If you guys want to do it separate, you can do the academy, but there will be no coaching. But yeah, I offer that. Offer a lot of free tools and insights. It's going to be at the bottom in the description box of this video. 1minutetraders.com is my official website. I only have 2 Instagrams. It's Forex Master and Forex Capital Management. And I have one Twitter that I share publicly. And this YouTube page, that's all my social media. I don't have any other ones. And if there's another one, it's probably an imposter. So don't fall for it. That's it, y'all. Hope y'all enjoy this video. Have a wonderful day. Have a wonderful week. Good luck trading this week. I'll update y'all with my silver trades on my Twitter and Instagram. So follow up with y'all later. Have a great week. Peace.